My name is Drew Waldron, and I am on with guest shark on ABC Shark Tank, venture capitalist and limited partner of the Atlanta Falcons, Rashaun Williams. Rashaun, thank you so much for sitting down with me today.
Super excited about it. Thanks for having me.
Absolutely. You've been defined as someone who has risen above difficult circumstances to lead a life of personal and career success. Now, what should audiences know about the beginning stages of your career?
Wow. Beginning stages of my career probably defined by three main categories. Pain, lots of that. Passion is what I transformed that pain into. And then a little sprinkles of myopic focus is what I would say kind of got me along the way. But the pain really came from growing up in poverty on the south side of Chicago, literally being able to see the Sears Tower from my neighborhood, but never have been downtown my entire, teenage life until I became an adult. And then later working in the Sears Tower for Goldman Sachs and downtown for Wachovia and all of these other places. So I took that pain from not being able to live the American dream like everyone else. And it kind of fueled my passion of not only entering into the financial service industry to understand money and being surrounded by billionaires and millionaires, but also come back to Chicago and teach my community and try to help these kids that I left behind kind of get out of their circumstances. So I've been teaching financial literacy for the last 25 years because of that passion. And one thing that I used throughout my journey early in my career was myopic focus. Just heads down, focused on being really, really good at one thing. And it's no shocker that I'm not good at other things, but still in the same investment and finance space 25 years later, and still very focused on growing it for the next 25 years.
And when you're teaching financial literacy, like you were just saying, what lessons do you find yourself giving out the most? What do you think are the most important messages that people need to hear now?
So for the masses, it's actually very simple. Invest early and often and for a very long period of time. The first thing I do every time I meet someone is I pull up a future value calculator with payments. People have never pulled these things up, which is insane. I'll show them if you put $500 aside for your newborn kid in a UGMA account until they're 21 years old, they'll have $466,000 if they invest in the S&P 500, which has been averaging 10% returns. And then if you also teach them about investing and make sure they don't go and buy a Bentley or Rolls Royce with that 466,000 at 21, and they continue to invest that $500 per month. Now you can do any job almost in America and get 250 a paycheck. By 55 years old, they will have $15 million, having never saved more than $500 a month. Now, in order to spice it up a little bit and get people fired up, I'll show up in the classroom with 12 and 13-year-olds and I'll just have a briefcase full of cash. And I'll say, if anyone can tell me what a stock is, I'll give you $5,000 right now. And the kids are going nuts. Anyone tell me what a bond is, I'll give you $10,000. And I tell them, I don't want to leave here with this money. I want you guys to have this money. Tell me what a mutual fund is and I'll give you 20,000. And I've never actually given away money. But for the next hour, there's not a group of kids in America that want to know more about what stocks and bonds are than that 30 or 40 kids. Now, of course, when you deal with adults who have financial trauma and they're afraid and, they've been taught to keep their money under their mattress, they just want me to tell them what to do. So I tell them to make sure your 401k or IRA is in the S&P 500. Get out of these bonds. You're 25 years old, right? Now, for the athletes and entertainers and the millionaires, they want the sexy stuff, but they need their vegetables. So I help explain venture capital and private equity, but what they really need is to figure out how to create passive income and how to have a long-term plan of intergenerational wealth. So I give everybody a little bit of what they need.
Interesting. It's so cool how you break it down differently for each of those groups of people because you're right. They all need different lessons. They all need different vegetables, like you were saying. You're not only someone who understands money, understands the finance industry, but you understand people, you understand companies. You've had an early hand in so many incredibly successful companies like Dropbox, Robinhood, Lyft. When these companies, when they're first starting out, when they come to you, what are you looking for?
Great question. So it depends on the stage. So for early stage companies, it's about three things and only three things. They don't have revenue. They don't have a product. They don't have a team. They don't even have a customer, right? At most stages, this is just kind of idea, conceptual, and they're building something. So take a wild guess at what their valuations are. They don't have a valuation because the way to calculate valuations is using a discount cash flow model or revenue multiples or any of the other financial metrics. So what we do is we actually value the founder himself or herself, then the team they've been able to assemble, and then the traction they've been able to accomplish with very little. Let me give you an example. If you, Drew, were starting a new e-commerce company and you were going to name it Drew Commerce and you went to market and you said, I'm raising $10 million, people will say, probably not interested. Your area of expertise is probably not e-commerce. You'll probably get money from family, friends, and fools, but you won't really get a lot of money because you don't have a lot of traction in that particular space. But if a guy named, let me see here, Jeff Bezos decided to raise a new e-commerce company and he had the exact same idea as you, what valuation do you think he would get compared to you? Because of who he is as a founder and his expertise in e-commerce. So that's why oftentimes VCs and investors are looking at the qualifications. Is this the most qualified person in the country to execute this idea? Are they more passionate and obsessed about it? And are they slightly crazy enough to pull it off? So when you get to growth stage, you start looking at KPIs. They have revenue. How fast is their revenue growing? We look at compounded annual growth rate or CAGR of revenue, month over month growth. How many customers? How quickly are the customers growing? What is the cost to acquire customers? What is the lifetime value of that customer? All we're doing is comparing it to other startups. Think about the NBA, for example. The max contract guys have the highest points per game, rebounds per game, assists per game. We're trying to find the equivalent of that in our particular industries. And then last but not least, in late stage, these companies are already worth $1 to $20 billion. They're already doing hundreds of millions or billions in revenue. It's really about price. One thing I learned on Wall Street in 2000 when I first joined Goldman Sachs was there's no such thing as bad deals. It's just bad prices. So when you're dealing with massive companies who are already profitable and dominant, you really have to underwrite the transaction to get the desired return you want. And the KPIs are there, the management team is there, all of that stuff is already proven.
It makes a lot of sense. Reputation is everything. And personally, your reputation, all of this led to you being a guest shark on ABC Shark. And now
Yeah.
I have to ask, what was your experience like filming your first couple episodes when you first got on set?
You know, the best example I can give you, imagine if you were an emergency room doctor in real life, and then you became a guest doctor on Grey's Anatomy for like a few episodes. That's what it felt like, right? Like, hey, I do this for a living, so it's kind of cool, but hey, that's not how it works in the real world. But wow, you guys are making us look so cool. So like, I really love Shark Tank for two reasons. They made my job look way cooler than it is. In the real world, I'm begging for the best founders in the country to take my money. On Shark Tank, I'm a complete savage, like a complete shark. I get to have a whole alter ego of like the big bad wolf, right? But in the real world, trust me, I'm rejecting the worst companies and I'm begging the best companies. That's literally what my job is. But the other part of Shark Tank that's interesting is I'm not used to being on a panel with other investors while I'm trying to win a deal. You know how nerve-wracking that is? People talking all over you at the same time, these big personalities and celebrities, and they're super smart and they have tons of money. So that competitive drive is kind of cool. And the last thing that really freaked me out, I am not used to seeing people's reaction after I invest. People crying and want to hug you and want to chit chat. And I'm usually doing this over email. I don't even see the reaction. I didn't know people cried after they got investments. So it's one of the coolest experiences ever. And for me, it was a way to broaden my platform of teaching financial literacy. That's the thing that I get really excited about. How do I take this show on the road while keeping my day job, right? So being on Shark Tank, you know, entrepreneurship democratizes wealth creation in this country. You have the ability to help entrepreneurs raise money, build startups faster, investors make better investments. And it's on television and all the clips are on YouTube and on the internet. I mean, for me, it's a dream come true because I get to keep my day job and then I get to have this massive impact. And I don't have to go in South Central LA on the South Side of Chicago to teach financial literacy anymore.
That's incredible. And that is so sweet about, seeing the reaction there in person. It's got to be such an incredible experience. Do you have any behind the scenes stories that might not be publicly known that you could share with us?
Of course I do. I mean, what do you mean? Do I have behind the scenes stories? So first I'll tell you the love that I got coming on was amazing. I was expecting these people to be like they are on TV. Let me tell you something. Kevin O'Leary is like the nicest guy I ever met, right? Gave me great advice, just playful banter back and forth, had a really good time. Mark Cuban, when I first met him, he introduced himself, gave me a dap, not shook my hand, gave me a dap. And I think he said something like, "What's up, my guy?" Mark Cuban talks like a 25-year-old black dude. Of course, he's been working with all of these NBA players for 25 years, right? So I'm like, "Whoa, what's up, my guy?" I'm like, did this dude grow up in the hood down the street from me or something? But one of the smartest guys, and no matter how different we all were, it was a lot of respect and it was a lot of love. I get compliments from Lori and Barbara. They're like, "Wow, we learned so much, working with you today, and you're really good. You should ask for Cuban's job." Everyone's telling me to ask for Cuban's job. I'm like, can't fill Cuban's job or role for sure. But the other thing that's behind the scenes that people don't understand is these pitches are an hour. These are not 3 to 4 minute pitches. I'm sitting there for an hour. And if you ever watch the show, and if I have a cup on my table, it's probably peach Ciroc. People who know me know I drink peach Ciroc with ice. So I'm just sipping on my drink, listening, taking notes, having a good time, and doing my day job. But they do tell you, Rashaun, this is business theater. Don't be so predictable. Don't be so cerebral. Tell people what you're thinking. Like, throw people off a little bit, right? Like, you don't have to have the same facial expression. And most importantly, which is not natural for me, let people get to know you. So I try to bring my personality out. If I'm there long enough, it's going to come out anyway, whether they like it or not. But I try to allow my personality to come out and let people know what I'm thinking while I'm thinking it, which are not natural things for me to do. Because you're playing a little poker in the real world, right? So in Shark Tank, I mean, it's amplified even more. I mean, what a great production. They give you really good advice. You have no idea who the companies are. It's real money. We do have time afterwards to do our due diligence and verify everything that's being said. But as a deal maker, man, I just love doing the deals. And I told them when I went on, I said, "Hey, how many companies am I going to see if I'm there for one day filming?" They said 10. I said, "I need to win all 10." And they started laughing. I was like, "Look, in my world, only 1 out of 10 make it. So I'm not coming here to donate money to the Shark Tank charity. I'm coming here to make money. But I need to win all 10." And they were laughing. And I feel like when I went there, I was being very aggressive. And I think they were looking for someone that was a little different, that could teach people, that brought a different perspective. And wow, what a good time.
Wow, I love that real Rashaun and TV Rashaun are both very competitive people. That's so cool to hear. Rashaun, we have time for one more question. It's been great to sit down and interview you. And we always end on a question like this. Feel free to answer it however you'd like. In 2025, what advice do you have for young people?
Oh, wow. A lot, because they need a lot of advice. But I'll break it down into a few categories. If you are a young person and you're entering into the finance industry, I'll give you advice that I learned from my mentor and from my experience working 12 years on Wall Street. You really have three jobs. And I think people are losing focus of what it takes to be successful, in 2025 versus like 20 years ago. The first job of any person entering finance, you guys can write this down if you're a finance guy, right? Number one, learn as much as you can as quickly as you can. And I'm not talking about Chat GPT. Okay. I'm talking about listening in on every call and every meeting, taking notes, asking questions, then going home and studying that information, coming back the next day, absorb all that information and ready to implement. Okay. Number two, find ways to help them make money. You are a liability when you first come into these financial service institutions. You don't know anything. I know the HR department convinced you that you were great, but you actually are not, right? So you're a liability, and every minute someone spends teaching you is a minute less they spend making money. So find ways to help them make money. Do all of the dirty stuff. I was getting coffee and answering phones and relaying messages until I was able to add enough value, and I was so indispensable that they couldn't function without me, right? So find ways to help them make money. And then number three, most important, get them to like you. I think we're so sensitive these days that if we feel a vibe from someone that doesn't like us, we avoid them like the plague. But those are the people making the decisions behind the room and saying, this person isn't a good fit. It's your job to get them to like you. That is not a gift that they give you when you start. Your likability. So for people in finance, if you do those three things, I can guarantee you, that you will do better than others, right? At least you'll have a chance at doing well. Now, For entrepreneurs, on the complete opposite side, say corporate isn't your route. You want to launch your own business? Guess what? There are 3 rounds of capital that you raise before you come to guys like Rashaun Williams. All right. I'm going to help you out, save you a bunch of time and a bunch of rejections. The first round of capital you raise, Drew, take a wild guess. It's your own money. You got to have some skin in the game. You got to put your own money in this thing to show people that you're committed. The second round is from family, friends, and guess what the third F is in that group?
You said it earlier. Was it fools? There we
You
go.
got it. People who are related to you, people who've known you your whole life, or people who just don't know any better. Who else would invest in something with a 5% chance of success with their after tax money, right? And then last but not least, angel investors. So by the time you put your money in and raise from family, friends, and fools and raise from angels, you have a product, you have a market, you have fit, you have a team, you have all of these, you have some revenue, you have growth. Venture capitalists are mostly growth stage investors. Now, if you come to us and you don't have those things, then someone else is coming to us with those things. We're going to tell you you're too early. And the other people are going to get $5 or $10 million. So I'm giving the answers to the test to help increase the probability that you guys can go out there and crush it. And then last but not least, for kids in general, look at the professional athletes you know. Steal their entire business model of what made them successful. And I'll boil it down to 3 things. The first thing that athletes do that make them more successful than everyone else is they are so focused on one thing their entire lives. Stop skipping from thing to thing to thing. All right. Just stay focused on one thing. And even if you have a new idea, you don't have to tell the whole world and social media. You can let it percolate a little bit before you get it out there. Number 2, you have to have the work ethic to support that thing you're focused on. Right? In the gym, watching film, practicing, rehearsing, listening to audiobooks, reading books, all of these things. You have to be in the gym. You have to have the work ethic to support the development of that thing you're focused on. And then last but not least, that ability to handle pressure and that sense of competition that pro athletes have. Everyone's watching you. Steal the best moves. When James Harden did that little step back move and shot a 3 for the first time, it took 1 week before half the league was doing it. So I want you guys to steal the step back and replicate the best moves that you're seeing out there. Be competitive. If someone's getting money and getting job offers and launching their startup and getting into good colleges and getting all A's and doing a summer job and an internship, I want you to be thinking, I need to do that and I need to do it better. If you do those 3 things, that would be my advice to you. You would have the level of success that pro athletes have in whatever industry you want to pursue.
My gosh, such great advice. You should be a speaker. You really should be a speaker. Rashaun, this has been an incredible interview. Thank you so much for your time. That is going to conclude our conversation with Rashaun. Again, this was fantastic. Thank you so much.
Thanks for having me.